Yo! What's going on, guys? And welcome to episode 5 of the Owl Eyez on BASE Defi show, hosted by your boy Basejunkie and my knowledgeable co-host, Crypto Noah. Without further ado, brother, how are you tonight?
Oh man, I woke up on the right side of the dirt, so I honestly can't complain, man. I got some, we always Basejunkie hopped on and we were about to go live. He was like, "Oh, bro, I just realized I'm wearing a regular T-shirt," and I was like, "Go change right now." Yeah, I'm wearing. I went to ETH Denver back in February, and I was in Europe for 3 months, so I haven't wore like the free 50 shirts that I got. But this shirt says "Move fast and build things." It's an alchemy shirt, but that is definitely the case on Base. Today we're going to talk about some cool things that's been happening, how it's going to affect DeFi. We're going to look at some yields. We're going to look at Basejunkie's golden pool. He's told me that it's been doing really good, but I don't know how good because I'm genuinely excited. So yeah, man, how you doing today, man? What shirt you rocking?
Well, you're absolutely right. I mean, like literally, I think probably about 50% of our audience tunes in for the DeFi, 50% tunes in for the fashion. So tonight I'm wearing
Let's go.
Connect to Web3. This has got to be one of the comfiest tees I own. This is straight from the Dimes community over at our on-chain summit. Friend. Yeah, dude, that was the second time I met you IRL. But honestly, I love the way this shirt feels. It's a nice thick cotton, and it's a long shirt. You know, like if you're a tall guy like myself, you know, reaching up for the top shelf, you see a little bit of the bottom tongue. It's like I'm not Britney Spears here, so I'm happy that I got this this long shirt. It fits like a glove. I rock it a lot in my personal life. But yes, you are right. I was wearing a regular tee today, and like sin above all sins. I was like, oh shit, and you're like,
change that out.
Get rid of get that get that Web 2 shirt out of here.
Man, I'm not even gonna lie. Like it'll be a couple days before the show, and I'll be thinking like, man, what shirt am I gonna wear? Like I'm going out to the club or something. I don't really go out except to like networking events, but when I like do this show, this is when I dress up. So hey.
That's what's up. That's what's up. I mean, that's priorities. That's commitment. People want to see. They want to see the drip. They want to see what the fashion is, happening on Web3.
Yes, sir. So let's jump into it, man. So first, I realized that we kind of did this show kind of ad hoc, and we've been teaching people things kind of not in order, but that's okay. But I wanted to talk about like, what's the whole point of a layer 2? Like we got Base, we got Arbitrum, we got Polygon, we got Optimism, we got ZK Sync, we got all these different layer 2s. Like, what is the point? So I just want to kind of talk about that because our whole goal is to show, other than to show you guys our fly merch, is to really educate you guys so you can know why these protocols exist, what they need to do in order to be able to go mainstream. Because not only can this help you while you're using these protocols, but it helps you as an investor as well. And the whole goal is to be able to take care of the family, at least for us. So I want to just kind of jump into that. So in crypto, blockchain specifically, you have this issue that I think Vitalik coined it, called the blockchain trilemma, right? Picture a triangle. At the bottom, you have decentralization. On this side, you have scalability, which is transactions per second. And on the left side, you have security. In the beginning, most blockchains were optimized for 2. So if you look at Bitcoin, Ethereum before it moved to proof of stake, they were both really decentralized and they were both really secure, but they weren't that scalable. Like I think Bitcoin can handle 7 transactions per second. And I think before the merge, ETH can do 14 transactions per second. And if you look at something like Visa, it can handle, even though it's not a blockchain, but the whole goal for this thing to be mainstream is that, Visa is built on chain. They have patents and things too. We want to be able to handle global demand. They actually need to be better than Visa because Visa doesn't work somewhere. Blockchain works anywhere where you can use an internet connection. Visa can handle like 60,000 transactions per second. So ETH wasn't even close. So having that said, a blockchain has 3 main layers, right? You have a consensus layer that says what's true. This is the consensus mechanism on Ethereum. That's now proof of stake. You have the data layer, which is like your storage, right? You have a blockchain And in order to have this continuous blockchain where blocks are being added to the chain, you need to be able to go on the block explorer and see all the transaction information that's inside of each block, right? That's the storage component.
Mm-hmm.
You have the execution layer, which is your computational finality, where the next block gets added to the chain and it continues to happen. Now, having that said, in the beginning, all three of those things were happening on the mainnet, okay? And any blockchain is in the business of selling blocks, right? Just like a plane ticket. And if you refer back to like the 2021 bull market before L2's and definitely the 2017 bull market, you had all these Ethereum killers rising up because the issue is that the gas fees were going too high. And the reason why is because no matter what your transaction is, whether you're minting an NFT, you're entering into a liquidity pool, you're staking on Aave, you're whatever, we're all competing to get inside of the next block. It's literally like a plane flying from New York to San Francisco. If it's a small plane and it's only a few of them coming, what's going to happen to the tickets is everyone wants to go. They're going to go up, right? But if you have multiple planes going there, the ticket prices go down because more people can fit. It's the same thing with blockchains. So now, in order for blockchains to scale, and we're seeing this with the advent of layer 2s and sharding, they need to take a modular approach instead of being monolithic. Monolithic means all those things are happening on the mainnet. Modular is like a division of labor where you have certain components that are specialized to do a certain thing. This is also how chips scale. And this is actually how our cells govern the inner workings inside of our body. And I always like to say, as it goes in nature, it also goes in everything else too, including blockchains, right? So we have like an amoeba, and then we have cells on the outside of it that manage certain things for digestion, another one for blood flow. Like there isn't a single cell that handles everything, or else it would be too overworked and we'd probably be vegetables. So now layer 2s, having all that said, layer 2s are built to help with the scalability portion, to increase the transactions per second, right? So, you know, Base, Optimism, which Base is built on, Optimism, they call it the super chain, Polygon, ZK Sync, all these layer 2s, they're built to help Ethereum scale, right? So how it works is that you have optimistic rollups and you have ZK rollups. And maybe that'll be the topic for the next show. I'm not going to get into the weeds of both of those because, you know, it can get pretty complex and I'll be talking for a while. But they're called rollups because it's similar to compressing an email. Like if I were to send Basejunkie an email and it's a lot of data, I have to compress it before I can send it off. And when you compress it, it shrinks it into a smaller packet of data. I send it to him, he unzips it, and now he gets all the data and he can download it on his computer. It's the same thing with layer 2s. They call them roll up because they roll up all these transactions, and instead of the transactions having to fit into the block on the mainnet, it's happening on the side chain. They roll up all these transactions, they compress them to a small packet of data just like you would an email, and then it submits it in a smaller packet of data to the layer 1, in this case Ethereum. And this is good because Ethereum is really secure, so it still gets the security components instead of having to do it on the L2. And then all the transactions get handled at once. And a good analogy for this is like when you go to a bar. You go to a bar, you don't get in line every time you buy a drink or buy some food. It wouldn't be as good of an experience if you have to keep getting in line, because your whole point to go there is to socialize and dance or chill, whatever you're into. So instead, you open up a tab, right? You buy it once, you get your drinks. Oh, throw another one on the tab, throw some food on the tab, drinks for everybody, throw it on the tab. And at the end of the night, you pay for all the transactions at once. Now you don't have this long line and people can enjoy themselves at the bar. It's the same thing on chain. You want these things to scale. We need to take a modular approach. And these L2s are really speeding that up. And I believe in the future, we're going to see most, and we're already kind of seeing this, we're going to see most of the actual applications that we know and love built on the layer 2s, because let's be honest, our attention span is shrinking more and more as data and, you know, internet speeds and 5G and all that stuff is getting faster. So we're going to be using the L2s mostly without even knowing it, but we're going to get the settlement and the security is going to happen on the L1. So that's the whole point of layer 2s, in case you guys didn't know.
Yo, no, I first of all have to say, I love the in-depth deep dives into the 101 sort of crypto, and like the whole layer to premise. Like it's the why Base exists, to be honest, like to solve that third side of a triangle. And I think even just yesterday, Vitalik posted a a supportive tweet saying that Base is doing this right. They are focusing on the fundamentals and delivering on like building on top of this. So yeah, dude, I think that's really a great summarization. No comments at the moment, so I think maybe everybody is tracking well.
Before we hop into the pool, because you brought up Vitalik's tweet, I actually want to look at something that I just saw this article yesterday regarding Base. I'm gonna share my screen here, and that's why I wore this shirt. Move fast, build things, dude. Base is building, man. You may have heard about it, but basically, Coinbase launched XSGD. And then speaking of Vitalik, as Buterin names Base a benchmark L2. So they launched the Singapore dollar. And I'm going to talk, because this is a DeFi show, right? This isn't just Base news. We're going to talk about how this is going to, or at least how I think it's going to have an effect on DeFi. But they launched the Singapore dollar-backed stablecoin on Base, right? So Coinbase is like spreading their tentacles globally, right? They're trying to offer services around the world. The stablecoin is pegged 1-to-1 to the Singapore dollar, right? And then Vitalik, he publicly praised Coinbase's layer 2 solution for its approach to scalability and decentralization. And he describes Base as doing things the right way, emphasizing its balance between centralized features for enhanced user experience and its foundation on Ethereum's decentralized model, right? So I'm just going to read a couple of these points, and I'm going to go back to my screen, and we're going to talk about why this is so huge. So it says the availability of Singapore dollar-backed stablecoin on Base provides users with increased liquidity options, facilitating smoother transactions and broader market participation. It aligns with regulatory standards, potentially attracting institutional investors. So this is huge because, like, we all know that the dollar is the world reserve currency. And just so let me talk about how stablecoins work, and we'll talk about this one and why this is like so huge. Like, it seems like it's just like, oh, some good news. It's actually really huge. So like I said, we had the Genius Act pass, which allows banks to issue their own stablecoins. We have Tether and USDC, which are the top stablecoins. Even the Trump administration launched their USD1, but I haven't really heard anything about it in a while. PayPal has their own stablecoin. Okay, great. Now, banks are going to be able to issue their own stablecoins, right? And this is going to be very inflationary, guys, because how stablecoins work is that if I go on Coinbase and I buy some USDC, $1 immediately equals $2 because I give Coinbase my dollar, and you can go and read their monthly attestations on their audits and what USDC is backed by. It's mostly like commercial paper and US Treasuries. Fun fact, USDC and USDT are in the top 10 in buyers of US Treasuries, guys, if you hadn't known. So it's not a small feat. Like, they're really in bed with the regulators, cuddling and spooning. So got to keep it light. So this is huge because once all these stablecoins are getting created, it's going to cause massive inflation. Like, if there's $10 billion in inflation and stablecoins created, that equals $20 billion in the system. That money is going to find its way into asset markets, and the people who are going to lose money are going to be the people who don't invest, and their savings are just in dollars. Even worse, some kind of hyperinflationary token. And that's why stablecoins is crypto's killer app, right? Tether is the top company in the world for the revenue they make in comparison to the employees that they have, because you make transaction fees and then you literally take money and you get to invest it for free, and they don't have to pass along any of the yield. Now, I do feel like stablecoins are going to start to get competitive with all these banks launching their own stablecoins. I feel like eventually USDC and USDT are going to have to start paying out some of that yield. Now, this is huge because the Singapore dollar is huge because, like, Singapore is a really, I think they have like the lowest crime rate in the world. They're a really good economy. So people want exposure to assets like that. And it's really hard to get exposure. Don't think about stablecoins just like normal. It's hard for me to get access to any other foreign currency. Like, it's not impossible, but it's hard. And US dollars are the hardest to get access to because you have to be, you got to be in the system. But with stablecoins, you don't need to be in the system. All you need is a wallet address, man. You don't got to submit a driver's license. You don't have to KYC. All you need to do is go on the internet, make a wallet. It takes literally less than 2 minutes, and send someone an address, and you got US dollars. And now you can save in US dollars and not, or whatever the currency you want, and not have to worry about hyperinflation. Because you have some people in some countries where they'll wipe their ass with their currency because tissue holds value better. Like, this is not a joke. So with this Singapore dollar, if you think about DeFi, guys, it's just going to make DeFi more competitive, because if you have institutional investors getting involved with this, we have stocks coming on chain. You know, there's a podcast I was listening to, and the head of institutional investing at Coinbase, they acquired his company, and now he's spearheading helping Coinbase put U.S. assets on chain. So it's just like DeFi and TradFi is going to merge, just like Web 2 merged with Web 1. Like, we thought that people were going to get on the internet and it was going to erase how we were doing things before, but that's just not the case. Like, before the internet, we were writing things down. And if you go to any of your parents' or grandparents' house, I guarantee you they still got file cabinets of shit from back to the 60s, right? So it's going to be the same thing here with Web3. We're seeing DeFi integrate with TradFi, but TradFi is not ever going to go away. We've been using this stuff for over 100 years, right? Or around 50, probably since the 60s. We've been using the same technology. So the more stable coins that get launched is literally creating a global pan field, right? And it's going to help extend DeFi's golden age. And I say golden age because the more liquidity that comes in and the slower people are to learn, that just means it's going to be more pools pan out better for a while. So the more stable coins we get in, the more projects are being built, the more we can provide liquidity and make yields on not just whatever currency we want, but whatever project that we want in the entire world. There has never in the history of the world has there been a global market that people can play in. All the markets in the world have been siloed since the beginning of time. It wasn't until blockchain technology that's starting to eliminate all this fragmentation. And it's going to be good, because if you have a global playing field where it's going to be really competitive, because people are going to go where the best yields are, where the best opportunities are. And since we have the whole world playing against each other versus just the United States, it's going to be much harder to create monopolies. It's going to be much harder to basically reign, because you're competing with the whole world. So yeah, that's huge stuff.
I mean, absolutely interesting points. I think the whole, people were saying this is a stablecoin summer. We're seeing a lot more stablecoins pop up from around the world, not just pegged to the dollar. Countries are having their own stablecoins, and that's one of the powers of decentralization. As somebody who looks at yield and as somebody who is well versed in DeFi, I know recently, I think Coinbase made an announcement about the returns you can make on saving your dollars with Coinbase. And then I know Morpho has their own rates, and Banker, I know Banker, I've been looking at Banker quite a bit recently. I actually just joined the club, but they are offering like 7% returns on USDC. But then I'm also looking at some other projects like Macro offering like 23% plus 13% of their own token. Somebody as well versed in DeFi as yourself, where are you looking to park your USDC?
That's a great question. You know, it's funny because a lot of people don't know this, but most people they'll get a yield on their stable coins doing like single side staking, right? But you can also put USDC and USDT in a liquidity pool and make an extremely tight range, because they're pegged against the dollar.
Yeah.
Right? Sometimes they'll go to $1.03 or 97 cents or something like that. We had the whole depeg back in 2023 of USDC when Silicon Valley Bank and that whole thing happened. But you can get like between 20 to 50 to 60% sometimes just pairing two different stable coins on a decentralized exchange, because people swap between stable coins pretty often, actually. And yeah, so, but other than that, places like Aave, because you have a lot of these different stablecoin pools popping up, and the most important thing to know is like, what are they doing with my stablecoins? What are they doing to get these returns? Because Warren Buffett's two rules to investment is don't lose money. Number 2 is remember rule number 1. So it's just like, you really want to know what they're doing to get that yield, because if they're taking excessive risk, I'm better off just going in an ETH USDC pool and I can use the yields from that to grow my stablecoin bag as well. That's another thing. I'll have a portion of my stables like not in smart contracts, right? And another wallet that I just use for send and receive. I'll have another portion on Aave. Maybe I'm in like a leverage long to buy ETH, right? Leverage long ETH. So I'm using like my USDC as collateral. I'll borrow Ethereum, sell it for more USDC, redeposit it on Aave, borrow Ethereum again, sell it for USDC and loop it a couple times because, you know, I do think we'll see a 10K ETH within maybe the next 6 to 8 months. And doing things like this, you can actually get paid to sit in a leverage position because you're getting paid to stake your funds on Aave, and then you can still take the funds that you borrow and go and provide liquidity on a decentralized exchange. The ETHUSDC pools at any given time, let's actually look at a few of them. You can get triple digit yields pretty easy. Like I said, guys, we're in the golden ages of yield farming where we can provide liquidity in a place where institutions aren't allowed yet, guys. So if we look at ETHUSDC right now on Aerodrome, you can get 159%. That's pretty good. On Camelot, 113. On Pancake Swap, on Linea, and really on Linea, but even on Base, on Aerodrome, 94%. And this is the average. So you can be in like a wide range pool and you'll get, you know, 60, 70, 80. And then you can have another portion where you're in a super tight range and you just rebalance it when it goes out. And then you can get, you know, 100 to 200%. And on the big volume days where ETH really moons, this will go up to between 2 to 600% sometimes. So that's how I've grown most of my bag of stables when it comes to yield farming. And other than that, I'm just kind of taking profits. But let's see if it shows.
Question here before we jump off. So on this Mango pools.
See, look at this. USDC, USDT, 188%. USDT, USDC, 44%. 32, 29, 16. You're not going to be able to get that single side staking. And the best thing about it is that when they're single side staking, they're taking excessive risk in order to do that. But here, you're just swapping stable coins. You get a higher yield with way less risk. I'll take that.
That's based.
Yep.
Question though. So this correlation, in my understanding of the word correlation, the higher the correlation, the more they move in sync. Now, looking at the top two pools, I see USDC, USDT, USDT, USDC. So I would think that those would be close to 100. And I see that on the second row, 95% correlation on Avalanche, but a 0% correlation in Optimism. Why do you think that is?
I think that's just a bug. And we're trying to launch some new stuff on here. So I think our developer, that's just kind of bugged out, honestly. Because it's USDC and USDT. It is on the
99% really.
Yeah, it is on the Optimism chain. So maybe the supply and demand dynamics for both of the tokens are a little bit different on that chain. Because like what happens is, like, you know, the price of stable coins, they go up and down sometimes. And the reason why is because, like, for example, supply and demand. If you have a lot of people selling stable coins in a bull market, the price of the stable coin will go down a little bit. Right. And you have to give the stablecoin issuers time to, like, you know, bring things to return things to the mean. And in times where people are deploying a lot of stablecoins, you know, the opposite happens in that the price goes up a little bit because it's less on the market because they're using it to buy different assets. But overall, you know, they typically stick to around the same price. So when it comes to the correlation on these, you know, I'm not going to hop on Athena or no like janky decks. You know what I mean? Like definitely not getting on Cetus. Shout out to Sui, but, you know, definitely not getting on Cetus and doing it. So I would stick to protocols like Velodrome, Aerodrome, Uniswap, even Orca and Radium, but mostly Uniswap.
The big ones.
Yeah, the big ones.
Question. So, I mean, this is off topic, but this week we saw the launch, the BNB launch of Avantis. Have you been following that, or what are your thoughts if you have?
Let's pull it up really quick here. I actually have it up on my tab because someone in one of my DeFi buddies, she sent it to me and told me to have a look. I haven't
massive volume. Lots of people are touting it as the Binance Cabal play. I mean, so I'm not following it too much because I'm not invested in it. So I don't like to. I think sometimes when you watch coins that you're not invested in just do extremely well, or like I have no skin in the game, so why would I spend my efforts there? But last cycle, BNB kind of made a huge name for itself with the meme coins. The whole BNB summer of 21, like or 2020, they were like huge. That's when I got actually my only real deep dive into DeFi last cycle was Pancake Swap, Beefy, just some of these things that were around back then. I know the competition has really elevated the game, which is why I'm learning so much with this series. But BNB really lost a lot of mind share this cycle. I mean, Solana came in and took and dominated really the degen trader, the trencher, and BNB kind of was left in the dust. And many people are saying that this Avantis play is the answer to this dilemma. Like, okay, how can we get people back? And Avantis seems to be the solution.
Yeah. Well, just looking at a few things here, like I said, I haven't got a time to fully deep dive on it, but the pool on Aerodrome is paying out pretty well. The Avant USDC, it's been consolidated. Oh, it looks like it's only Avant USDC pools. Let's see if we look on CoinGecko and we look at
And question, like, so obviously like, right now it's mega high volume traded, massive volumes going through this, but it's not.
Well, they're on
consolidating. It's not consolidating by any stretch. It's just like pumping. So those 1200% APRs, is that a V2 or V3? Like how is that calculated?
Oh man, it's just the average of what people are making. You're always going to make more if you do V3. If you do V2, sometimes your liquidity won't get used. And they're on Coinbase, man. It's crazy they got listed on Coinbase that quick, and their token just launched a couple of weeks ago. They have been consolidating lately, so it's been the local low and local high is only 50%. So that's actually not bad, and it's been pretty much consolidating since around the 21st, which was only a couple days ago.
Question:
3 days ago.
Where did you measure? Where did you take the local low from? From the previous high? Oh, just there.
Yeah. And to be honest, this is the 1 hour chart. So I would use this as the local high instead of this, because this is just like the wick. In case you guys don't know how to read candles, the body of the candle represents the opening and closing, right? And if a candle is red, it doesn't matter what time frame it's on. This is the hour. If a candle is red, that means that the market opened higher than it closed within the hour. So like, and this is how they're all connected too. So this red candle, it opened here and closed here, but the wick just represents where it went within that time frame. So like this long wick here, the market opened here, it closed here, but it went all the way up here and it went all the way down here before it closed at the end of the hour. And then same thing. So here, the market opened here, but it closed higher. It closed here, but it went as high as here, but it came back down here below the hour. So I typically like to use the bodies of the candles, like measure the opening and the closing. So if we look at the actual local highs and lows, it's actually 34% is what I would say, because it was only up here for probably like 30 minutes or so, give or take.
With volume this high, does this look interesting to you as a token worth creating a liquidity pool for?
Well, just off of the yield and like the chart setup, yes, but I would have to like research it first. I never get into a pool just because the yield is good, because like, what if the token drops? And this is a legit project. Obviously, it's on Coinbase. People are talking about it, so I don't think they're going to rug or anything like that. But I will have to like research everything, see when the token unlocks are going to happen, because you have a FDV of 2 billion and a market cap of 541 million. So only 25% of the tokens are unlocked. So we need to figure out like, when are these other tokens coming out to the market? Let's see if it shows it right here. Yeah, so pretty actually linear vesting. So the unlocks aren't going to be super crazy, but they are constant. So things are mooning right now, but you can probably bet that once certain price levels get hit, these institutions, they have their sell targets just like any smart investor would. That will bring the price down a bit.
Temporarily.
So, temporarily. So just off of like the yield, Yeah, this is a pretty interesting pool to get into. I wouldn't hop in with too much. If I was getting into a range, I'd probably be somewhere around like from here to around like here.
Mm-hmm.
If I go and measure that
Makes
out,
sense.
that's 22%, and that will pay with how the volume is doing for this one in just the last 24 hours. Damn, this thing is paying out crazy. In just the last 24 hours, the liquidity is 2.6 million, but the volume was $40 million, guys. Let me go ahead and calculate that TVL volume to TVL ratio really quick. That's like a volume to TVL ratio score of like 10 or 11, which is really, really high, right? If we go back to the yield hunter, yeah, this
Sorry.
is
So
12.6.
question. So 40.5 in volume, and then 2.6 in liquidity.
Yeah,
How did you get to like 10.5?
so it was ballpark math, but so if you look here, the volume is 45.6 million, but the liquidity is 3.6. Is basically how many
3.6.
times can the liquidity go into the volume? You divide this, the volume by the TVL, and however many times it goes to it, that's what give you the score. So the higher the score, the better. And the reason why is because with this, just to give you an example, this volume to TVL ratio score is like if we look at this one's better than this one because the liquidity is 2.6, but the volume is 47. So that means, like, I always like to explain it in like using a Pac-Man analogy, right? If the volume is higher than the TVL, you can think of it as like the TVL are the Pac-Man. They're liquidity providers, right? They're the Pac-Man mouse eating, and the volume are the dots. That's the yield that we get paid. When you have volume that's higher than the TVL, that means you have less Pac-Man mouths with more food to eat. Whereas if you have TVL that's much higher than the volume, you have more Pac-Man mouths but less food to eat. People are fighting for scraps, and you don't get as much yield. So you just divide these, and that's how you get the score.
So just to clarify, the higher the score, the higher the volume to TVL ratio, the better the yield.
Absolutely. And you can see it right here. This one's 18.3 because the liquidity is smaller, right? This one's 3.6, this one's 2.6. So it's $1 million less, but it's a couple $1 million in volume more. So you have less Pac-Man mouths here, but you have more food. So it's 18.1 versus 12.6. Both of them are still good.
But also, let me just point out something. The percentages next to the Avantis USDC yield. I mean, we see this bottom one that has the volume to TVL 18 has a 0.01 fee. Is that? Am I correct in thinking that that's, although there's a lot of volume passing through that, the actual fees generated? I mean, you can see it on the fees.
Yeah.
4,700 versus the top one, which is also on Aerodrome with a fee of 0.3, similar sort of volume, but that was generated 137,000.
Yeah, because on each transaction, this fee is getting charged. So with $45 million in trading volume, calculate getting a 0.3% versus getting just 0.01, not 0.1, 0.01. It's significantly less than this. That's why it's much less.
Yeah, it's 1/30th. So I guess the takeaway for that is if you're looking to trade Avantis USDC, find that pool, the 0.01 pool, and if you're looking to provide liquidity, provide it to the 0.3 pool because that's paying out 30 times more.
My man, that's it.
I'm paying attention, brother.
Yeah, man, you get it. Dude, let's look at this golden pool you got going on, man. I'm excited to see what you've been doing.
Okay, so first of all, I need to apologize to the audience because I was doing this $1,000 challenge, just trying to make it, just extrapolate the initial 1,000. So for the first 4 weeks, I was in WETH Zora and USDC Zora. I believe, Zora really is too big to fail, even at Basecamp. Jesse's talking about Zora coins, creator coins. It's the future, but It hasn't been paying out anything like crazy. I think the APR has been maybe like 100 to 200%, which
Oh no,
yeah,
buddy.
I mean you compare it to a bank. Obviously, that's amazing, but
Mine's paying out. Mine's paying out 309% right now. Yesterday was paying out 414%.
okay, I mean that's cute, but let me. but uh,
It's nothing compared to this golden pool he's about to show.
yeah, I mean like you have to tell me because I swear that the numbers are not correct because it says something that is like unattractive, but I'm looking number go up and I'm like that can't be right.
Let's
But
see.
okay, yeah, dude, enough foreplay. I'm dancing around the topic, but I'm apologizing to the audience because this was a $1,000 challenge. I I was so impressed with the golden Weth pool from last week. I think I paid maybe 70% of the capital. If you remember, that pool had maybe like
It was like
300.
80 to 90% you made in a week.
How much?
It was like 80. You almost got your entire principal back, bro. It was almost 100%. It was like 80, 90 something.
What do you, I mean? So it was like $370 principal, and I made like $270 in the week, and I was like,
And the price dropped too, so you got to take that into account. If the price was break even, you probably made 100%.
I mean, honestly, I couldn't believe it. I'm like, this is got to be a glitch or something because the Zora pool paid me maybe like 12%. I mean, it's not bad by any stretch. I mean, that's pretty good actually for like 8 days. But I was like, okay, you know what? This golden Weth chart is moving super sideways. Consolidation is so tight. So in fact, I'm going to pull up that page first of all. So I'm
Man,
going to start.
I guess some things that glitter are gold.
Eh. All right, let's find this. Let's find this in real time. All right, so I was looking at this chart earlier. Well, this was a guest on the Base Breakfast show earlier, but let's look at the golden pool. So golden is looking to tokenize gold. The gold reserve, they have numerous partnerships. So look, this chart,
Damn, it's consolidating even more. Stay
if
golden, Tony.
dude, if you're trading this chart, it's not sexy. But dude, this is USDC. Sorry, this is USD.
Yeah.
Look at in ETH. It is so flat.
Damn.
This is like such a tight consolidation. So this has been since what the 19th. The past 5 days, it has been so tight here. So these were the ranges that I set last week, with that $300, just to capture this sort of movement, right? But then over this past week, it's been coiling up in such a tight way, and I don't know when this is going to end. But I was like, you know what? I'm a risk taker. I like this movement, so I set a few different ranges. I brought it really tight. So let me.
Nice. You're becoming a trancher.
So look at this. So I have three different ranges. All of them are in a range since yesterday. So I up my size. I up my size to maybe like 3,500. So not staying true to the $1,000 challenge, but I tried to set this up on a different wallet. It wasn't working. Set up on this wallet. Boom, I'm in.
Is revert still not working for you?
Well, I'm already in V4s now. I ditched my Zora pools. I'm like,
So whenever you enter into a pool on V4, revert
Mhm.
isn't compatible just yet. So that's probably why it wasn't working last time.
Yeah. So I ditched my Zora pools for two reasons. One, it wasn't paying out fantastically, and then two, Zora had some pretty bearish news last week. They lost a lot of community support because
What happened?
so basically, without announcing anything, they just got rid of the top creator coin, Casonomics. They had a market cap of about 20 million, and without a public statement or any sort of justification for the removal of their number one creator coin, they just got rid of them. So
Person like who had their own profile?
yeah, this was I think it's a creator team, Casonomics.
Like so, just some guy who created a profile, they got rid of him. Like they banned him from the site, or
They just delisted him.
for what?
Delisted him. this is exactly the confusion and question marks that the community has. It's like if there was some sort of breach of conduct, articulate that. But the fact that it was the number one creator with a market cap of 20 million, and then once they delisted them, it shot down to under 1 million. Thousands of people got wrecked, literally just out of the blue, down 95%. And it's like, what the fuck? Like, why?
They still
And
haven't said anything about it.
they never gave a public statement, and lots of obviously those holders are pissed, justifiably. They're really like fuming. But then also for other creators, it's like, hang about, if they can chop the head off the king, if they can axe the biggest creator and not address the situation, like what's going on over there? Like where's this is a breach of trust. Like at least communicate that, because if they did some sort of breach or something nefarious, it's like, okay, yeah, fine, tell us what happened, because I don't want to put all my eggs into that basket. Just as a creator myself, I don't want to put my eggs into the Zora basket, and then one day like we chopped Basejunkie off. He got too big for his britches. Like, but I mean, so yeah, Zora's been let me check the Zora real quick, just the price.
And an important thing to know for you guys watching is that they can delist the Zora profile, but they can't take away the person's token because it's on chain and just trading, right?
Exactly. So they didn't.
And what exchange does it immediately go to? Is it Aerodrome Zora that once the creator coin launches and get pairs with ETH? Is it on Aerodrome or like? I'm gonna check really quick.
I'm gonna check Casanomics real quick as well. Casanomics. Oof. Ooh.
Oh, it defaults to Uniswap.
Uniswap. That's
damn. That market cap is down like 90%. Ooh, that's ugly.
Look at that. Yeah, like growing from August, growing up and up and up. This is the daily, and then on one day, going from here. What was that? That was like what, 20 mil, I think. Boom, just nuke. And as you said, I mean, you are right. We can still buy and sell this token. It might even be a buy opportunity. Who knows? Like Zora's like, all right, Jeet's out, Chad's in. Let's buy the chart. Maybe it's an opportunity, but that's a high risk. That's not a safe bet. That's just if Zora wants to, I don't know, regain some community sentiment. But then the damage is done. People that were up here down 90% and sold for peanuts, they're hurt, they're burnt. So anyway, Zora is not the belle of the ball right now. So I'm not gonna just hitch my band to that wagon. I mean, let's look at this is the Zora chart. I mean, not a terrible looking chart by any stretch. I mean, they are Coinbase Ventures backed, got $50 million in CPV investment. So I think Zora will do fine. They will do fine. I mean, they're too big to fail.
Yeah, I think they'll bounce back. They'll eventually have to make an announcement as to why they did that. Yeah, that's kind of weird, man. But
yeah. I mean, for the purpose of this exercise, when it's like, look, you want tight ranges. You want to be able to predict the market and see how it's behaving, so that you can, like, the tighter the range, the higher the yield. And when I started to get into this was here, that's an acceptable range, that's wide. But then just these past few days, it's been coiling up so tight. So this has been like 3K since maybe, I want to say like 1 in the afternoon, so maybe like in 8 hours. And also these are all double, because
they're 1% fee tiers, which is good.
1% fee tier, so it's a high fee yielding. But look, this is only counting the ETH side. It's not counting the GOLDN side. So this is in.
It's probably double because the chart's been flat. It's probably double.
Yeah, exactly. So in 8 hours, that's $54. That's $42. That's $25. 50, 40, 25, $115.
That's pretty good
in 8 hours. So that's like averaging out like $300 a day.
That's what a construction worker makes working 8 hours a day out in the sun moving concrete. You just have to press a few buttons.
The opportunities are there. Yeah, this particular one, this is like super tight. This one I don't say I'm stressed about, but like, man, this was like, look at this. This is this has been in the range for the past 5 days. It came out briefly, but this is a tight coil. So I'm like, you know what? Look, this is 400. So I guess maybe this is maybe a $1,200 position, and like with such a tight range, this is paying more than 10% a day. I'm not a good trader, but I see a flat chart when I see it, and the thing about Golden, the team, from everything that I've gathered and from sources close to me, they vouch for them. Super legit team. So for me, I feel confident to put some money into it, but also I have my ear to the ground. There's no talk about it. So the volume here, this is just market making. Like this isn't community hype. This isn't like, yeah, let's buy this token. This is okay, look, let's keep the volume going so that we stay, relevant and appearing on these metrics. So as long as they're doing this before they get any like sort of huge announcements, I'm predicting a continuation of this tight range. So I want to see if I can hold this for until next week.
Do your thing. I also noticed that liquidity is still at 1 million. So no one's. You might just be in there with the team, bro.
Yeah. It's like 7 liquidity providers. Like, look at this. Like,
that's crazy.
Honestly, I think this is team, and then like you got those like little fries, and I think like one of these is me. Like,
dude, they say nothing cool can stay, but if you put gold on chain, it can pay.
That's it. Yeah. I was a bit stressed the other day because before I saw the news that ETH had like $1 billion in ETH liquidations, I just woke up and I checked the gold price. Oh, golden price, and it like shot down. I'm like, oof, like, oh, that's rough. But thankfully, ETH, like, so like golden dropped 7%. I mean, look at this. Like, this is no changes, 1% in a day. Like, this is super tight, super tight. I love to see it. But this dropped like 7% in a day. I'm like, oh man, I've definitely gone out of range. And then going to see ETH also dropping 7% in a day. I mean, I think we were barely, we were out of pocket for maybe like 3 or 4 hours, but then right back in it, like just that boom, wick, and we're back to business, baby.
Damn, that's wild. I just went and checked the Yield Hunter tool. It's still not on there. And I also noticed that when we were looking at Avantis, we had it on Avantis USDC. There is an Avantis ETH pool on Aerodrome that's paying like 800 and something % APR as well. I would rather hop in Avantis ETH versus USDC personally. But yeah, I'm gonna look at that this week, and maybe next week we'll talk about it, and maybe talk a little bit more about Syndicate. I've been diving into them as well.
Yeah, dude. I have a decent Syndicate spot bag. I bought in, but let's just look at the chart real quick. Oof, not looking sexy, the chart. But I mean, it's a good buy opportunity, I'd say. I bought in on this recovery around like 140, and then I DCA down to like under 80 cents, and it's just like now I'm in as much as I'm comfortable to be in, and I just pray for this.
Stack, pray, stay out the way. That's what they say.
Say again?
Stack, pray, and stay out the way. That's what they say.
Stack, pray, and stay out the way. That's how I'm feeling, man. All right, bro. Listen, you need to jump. I need to jump. But
great show, per usual.
Hey, look! In fact, look. This is it here. Zora's profile of Fake Taxi had exactly the same situation as Casanomics. Dude, I actually interviewed the Fake Taxi team, like literally from the real Fake Taxi porno channel, and they were saying that they weren't feeling the love, and so they bounced over to Solana.
Man, I wonder if it was like a glitch in the code or something. Because why would they want to take off their top people? Maybe they just don't want.
It's kind of you to sort of assume it could be like that, but I think for fake taxi, I mean, obviously it's like not safe for work content. Maybe it's like off-brand with Zora.
Yeah. What was the other guy? The Kazanomics. What was the content?
I wasn't even familiar with it. Like I was told third hand, like, oh, by the way, Kazanomics has been just yanked from the site. I'm like, who the fuck is? Oh, the biggest account. Yeah, shame on me for not knowing, but I don't know why they were pulled. It's just a poor way of going about it to yank the top creator and not explain why.
Well, hopefully they get their ish together so we can pump our bags.
That's it. That's it. Well, anyway, brother, I want to say thank you to you. I mean, do you have any final thoughts for today's episode?
No, just join our free community. Like I said, we're doing our 49 Weeks to Freedom Challenge. We're helping everyone try to reach 100K within their portfolio per our liquidity pool of recommendations. Not just mine, but we have some coaches as well. We do 5 calls per week. Join our free community. Tell Basejunkies ass to join as well. And that's it. Hopefully, I'll see y'all on the inside.
All right, sounds good, guys. All right, so guys, we host these spaces, these shows every Wednesday night at 8 p.m. UTC, where we talk all things DeFi yield. Follow our journey, follow my journey as I learn more from Crypto Noah as he guides us through the choppy waters of DeFi. I'm going to be hosting another show in about 30 minutes with this. Go on.
When you retweet, tag Base, guys. We need Base to know that we're doing this, so they can start sending people from the inside our way, so that we can get access to knowledge on the inside before everyone else. That's it. Take us out.
That's cool. Well, I have another show in about 30 minutes. I'll be interviewing District XYZ, the launch pad that raised over $1 million for Creator DAO just recently. Many whales are in, VCs as well. This could be a good opportunity for the builders to raise capital. If you are building something of substance, you want to join the conversation. So 30 minutes on my page. And then until next time, we'll see you next week, next Wednesday, 8 p.m. UTC for the next episode of Owl Eyez on BASE Defi. Until then, stay safe, stay healthy, but most importantly,
stay based.